Hello everyone and welcome back to our channel. So today the subject is shift in market structure. So in today's session we will see the different types of shift in market structure. So in itself, shift in market structure is not a strategy. It is only the third step of my 3-step strategy that I showed in the previous video called My Way of Trading. So note that the screenshots, the entries will be either bullish or bearish, but it works the same no matter if you are trying to buy or sell. It's the same pattern. Okay, so let's start. First, an important reminder, like I said, shift in market structure are only my way of entering. So it's an entry criteria that I use when I want to enter a trade, but it's not a strategy in itself. Okay, so you will see shift in market structure everywhere. Don't try to enter anywhere in the market because it will result in more losses than winning trades. So yeah, I do look for this type of entry after generally after a takeoff liquidity. So after a liquidity grab, and also after I'm sure that people are induced in the other direction that I want to trade. For example, if I want to buy, if I want to find a buy entry, I want to make sure that people are induced to sell. Okay. So now also an important disclaimer. All the video I will make and I am making or already made, and all the screenshots, all the content, all the posts that I will be making are only for educational purpose. I'm not selling any investments advice, or I'm not giving any signals. I will try, if I'm telling you that I'm looking for a scenario, it's not an advice to enter a trade or whatever. It's only like a possible scenario, and even I would try to not induce people in any scenario. So anyone has his own responsibility for trading, for any decision he's making. So yeah, do not trade anything that any concept also that I'm teaching you. First, just backtest them. You can also try to trade them on a demo account or paper trading, whatever, but do not trade live anything that I'm trying to teach you. It's for educational purpose. So first, study the concept, study the entry, study the shift in market structure, when it does work, when it does not work. So yeah, as I mentioned in my first video in the introduction, even though you have all the tools and knowledge you need to succeed, it requires a lot of chart work and a lot of time studying and backtesting the market before being able to properly trade live any concept you learn. So remember, even when I discovered this way of trading, it took me 3 months, and I am 5 years old in the trading area. So it takes years and thousands of hours of studying and backtesting and live trading before you can master the skill. So now let's start. There are 6 types. There are more types than 6 types of shift in market structure. However, there are 6 that I see regularly So I will just explain those 6 types of shifting market structure. Even 6, it's a lot for strategy, but whatever you will take, the one that is the most clean for you, the most appropriate. Some entries are more difficult than others, and some are more clear. So let's first start with the candle that creates and takes liquidity. It is also known as the candle that is supposed to make a new high, but instead it makes a new low. What does this mean? So here you have a bearish order flow. So you see this candle is responsible for this down move. Then this candle is responsible for this down move, and it creates also displacement. This is very important. For me, displacement is one part of my entries also. When there is displacement like this after an order block, I know that if I break this one, it gives me more confidence to enter. Okay, but what is the candle that creates and takes liquidity? It is this one. Why? Because people would want to sell in this order block. Okay, and they induce more sellers by giving you a bearish candle. Okay, and this bearish candle is supposed to make a new low, but it makes a new high. So it tricks people into selling. Therefore, people will put their stop losses right above this wick, and therefore that's why it is creating liquidity, and then boom, it takes the liquidity. In other words, it is the candle that is supposed to make a new low, but make a new high. Okay, so you can call it like you want. For me, this is a very powerful candle. So when we trade above, I would like to buy in this area. I would recommend the stop loss to be below this level and not just below here. Especially here, we have a small imbalance. But yeah, so this is my zone of entry for this type of shift of market structure. Now, a second example. So here you can see we have taken sell side liquidity equals. So you cannot see in the chart, but there were liquidity on the left. We took it there. So now I'm looking for a shift in market structure. People are already induced to sell because this is a new range for people. So people will try to sell there, here, here, and even there. Okay, so let's wait for a shift in market structure. This is not a single candle in this time frame, but if you go in higher time frame, it should make like a single candle. But it doesn't matter. In reality, you just have to take the sell point to buy, sell to buy. Okay, so you take this sell, and it was supposed to make a new low. You see, there is order flow. Here we have pushed down, created displacement, and this here it rebalance this fair value gap, so it all aligns. Then instead of making a new low, we made a new high, and even more than that, it created liquidity for people to think that it is here. People will think that this move is a break of structure. So what will they do? They will sell in this order block, put their stop loss right above there. So it creates even more liquidity. The more liquidity the market is creating, the more confident you should be in taking this trade. So what is the blue zone here? It is just a fair value gap. Also entries that we will see in the end of this video. So you can have multiple shift of market structure types in one setup. Okay, so it's not just one type, and the more you can combine things, the more the better it is. Like anything else, it creates confluences. So yeah, so this is the candle, the sell to buy to look for trade. Okay, you can buy here. And why the stop loss is not below there and there? Because here I see no imbalances, and this is the candle that creates the displacement. But if you want to be more safe, of course, for only 2 pips, you can put, instead of a 3 pips stop loss, you can put a 5 pips stop loss. And you see the move is very, very straight, very quick, energetic. So this type of move you find when there is a lot of liquidity that is created. So you see here the move is slow and then boom. So now the second shift of market structure type is, I call it the staircase. It's also known as 2BOS. But personally, this is not my favorite one. However, it is one that occurs also often. So it often occurs when there is like a push, and you see here in the middle there is no structure. So we need to form structure. Remember, this should be like below a buy side liquidity or inside a fair value gap, whatever. Okay, so this price action. So first here we fail to make a new low, we push. You could count this as a break of structure. However, personally, as it is not really a structure, I prefer to look for a real structure formation and then count. So here we have a structure formation, boom, break of structure, again, second break of structure, plus here you have a fair value gap, displacement, whatever, which gives you more confidence to buy inside this zone, stop loss below here, below this wick, and then boom. Okay, so this is how it looks. That's why it's called staircase. Second example, here we have this big candle, first push, break of structure, again correction, big push, second break of structure. You can trade here. I will explain why is there. But first, you can see that before the second push, here we took liquidity above. And why? Because people, you will see this is also a shift of market structure pattern. It's called the W. You know, the W, here you can see it. It will trick people into selling in this big green candle, which is an order block for people. So they would put their stop loss here because they want a big risk reward trade. So their stop loss is taken and then boom. So that's why when you have such type of price action, it's better to put your stop here. Second push, then we break the structure. You see this small wick, it rebalance this fair value gap. And that's why I expected the price to react from this area and not move above this wick. Because normally the candle that rebalance shouldn't be taken out in an order flow perspective. Okay, so a possibility, it could have gone here, so you could trade from there and stop loss above, does not matter. But normally the candle that rebalance, it's called an intermediate term high from ICT scores. It shouldn't go above this point. But whatever, this is advanced stuff. So now the third one, the third shift of market structure is the silent shift of market structure, also known as the forming of higher lows before translating into highs. And for this is for bullish perspective, but it's the same for the bearish perspective. Sorry, it's lower highs before translating into lows. Okay, so let's first start with this one, this screen that you may have already seen from my last video. It was a live trade that I took. You remember we failed to make a new low, so we created a higher low there. Again, failed to make a new low, and I enter after a doji or a small candle, you know, close to the bottom, so I wait for the close, boom, I buy, and then it came up. Another example, here we take liquidity out, take this liquidity out, people are induced to sell. Here we have a fair value gap imbalance, so we trade into this imbalance, then big push, we retest this order block, we fail to make a new low, and we create I think it's a hammer, something like this, whatever, close to the down, close to the bottom. I enter at the close of this candle, stop loss below, boom. Okay, so this one, this shift of market structure is more risky, but you see here you have no retest, so it just goes up, and you have maybe here a fair value gap retest, but it goes straight up and you can miss the move. So that's why sometimes I take the risk, whatever. Sometimes you can take a stop loss, no problem. It's part of the game. Here, same thing. We push down, we retest this order block, sorry, fail to make a new low, and we create a small green candle, close next, close to the low. You can enter there, stop loss just below, and boom. You see here, we did not retest this order block. We retested a fair value gap. So you could have a fair value gap entry. That's why there are different types of entries. And even if you miss this one here, if you take the fair value gap entry that we will see at the end, you could have made a good entry. Now let's see the fourth shift in market structure entry. So this one is liquidity times 2. Why times 2? Because it takes liquidity both sides, so buy side and sell side. It is also known as spring in the Wyckoff theory, or Judas swing in ICT. I think most of SMC people should know this pattern. You know, this is the one. Like there are equal top, equal bottom. You take the bottom, the top, and then boom. Okay. So you induce first people to sell, then you induce people to buy, and you take the trade in the middle, order block. So here it's interesting. Why? Because first we induce people to sell, people put their stop right there, boom. Now they are induced to buy, but in this range, okay? In this range, so they will put their stop loss below this. And here again, we induce people to sell because they will think that this is now the range. And you enter on the last sell to buy, okay? This is the highest point. So here you have the buy to sell, and this is the sell to buy, okay? Now, my favorite one, the M or the W shift of market structure, also known as liquidity taker pattern or fake BOS pattern. I like to call it like that. So this was a live entry, I remember. We took previous buy side liquidity. So I was looking for an entry. We have made this W. Okay, I entered right there. People will think that this is a buy entry. So this is, they will buy right there, put their stop loss here. Why? Because here you see there is a bullish order flow. Okay, so here they will see a break of this structure and they will try to buy to continue, but no, this is sell. So this is a fake BOS, and boom, W continuation. Another example, this is the setup that I love the most. So when I want to target a buy side liquidity, so seller stop losses or buy stops, whatever. Generally, there is an OB, an order block on the left that is unmitigated and that people are looking for sell in this order block. So this is where you can find the best entry opportunity. Even though you are in the middle of a range, no problem. People are induced to sell. They will look for a confirmation for selling, okay? So here they will think this is a breakout structure. So they are induced to sell. They will put their stop loss there, just above the order block. And you are already in a buy until you take their stop losses, okay? So here you have the M pattern, okay? From there to there, to there, to there, okay? Here, this is an order block, which took previous liquidity, boom. Classic, this is a very classic pattern, one of my favorite, just below liquidity and an unmitigated order block. And now the last shift of market structure entry is the one I took from ICT 2022 free mentorship on YouTube. So it's called the fair value gap entry. There are 3 criteria for this entry, which I will explain. So the first criteria is that the move is quick, energetic. It creates displacement. What displacement means? It's taking a short-term high, and it is closing above this short-term high. Okay. So here we have the 3 criteria that align. It is quick, boom, energetic, big candle. So no small candle, okay? Big candles. We close above this high. And I took this, it was a live trade. I took this, this buy with stop loss below here. And I was targeting this 1 hour fair value gap, which is above all this buy side liquidity. So this is the entry, but before I was looking for an entry. Look, you had this sell side liquidity, the black line, which was taken. So people will try to sell now. Okay, this is for them, this is a sell, this is a bearish structure. Okay, so they will try to sell in this order block unmitigated. This one is mitigated. This one, so this one also, this small one, this one important. And that's it, I think. But yes, I will try to sell all along until this week, because maybe they will think this is like the range, or this whole thing is a range. So you can target all this liquidity. I took my profit there. So always remember, you are looking for shift in market structure only after liquidity is taken and only after people are induced in the other direction you are looking for. Okay, if you are looking to buy, they must be induced to sell, and only then you can look for an entry for a shift of market structure. Okay, another example, always the same thing. So fake OB, it's not a fake OB, but an OB that induce people to sell, and there is liquidity above here. So here we have rebalance this fair value gap. Here there is one that is unmitigated fair value gap. So you could snipe here, but I do not recommend. I prefer to wait. Why you could snipe? Because it is also below liquidity. So people will be induced to sell when we break this point. Okay, when we break this low of this structure. You see people, so this is an order block. People wait for a confirmation, which they get by this breakout structure. Then you can start looking for an entry. So let's say you entered on a snipe. So entry one made here with this candle. You put your stop loss below there. Okay. Now, if you are looking for a confirmation, well, you look for the same thing. Fair value gap. Here, boom, you enter on this wick inside this fair value gap, stop loss below. And this form also the M pattern. Okay, M pattern and fair value gap entries. So confluences. And you see when you trade the right direction, generally it goes fast. Okay. It doesn't have to stay very long here. So that was it. Thanks for watching. And as always, do not hesitate to share the video or leave a comment in the commentary section if you have found this video valuable. And you have the link for my website. There are good articles you can read, mostly on mindset, but some also on trading. And you can visit my Instagram page, in which I will post weekly setups, the best setup of the week or whatever. Thank you, guys. See you soon.